Friends, welcome to the channel JAIIB and CAIIB Made Simple. So this is our IIBF MSME certification course, Module C quick revision PDF, and that Module C is related to institutional framework and MSME financing. So I have already provided you Module A, Module B quick revision session. If you have not watched those sessions, please check the description section of the video. You will get the link of them. So now similarly I am going to provide I'm going to explain all the important points in lucid manner, easy to understandable manner. So let's get started. First of all, when we talk about the growth of MSME in India, one key player is SIDO, which was set up way back in the year 1954 under the Ministry of MSME. You can think of SIDO, right? You can think of SIDO as a guide, as the backbone for small businesses. It not only gives direction but also launches initiative to make MSME more competitive. Over the year, it has played a big role in boosting India's economy and nurturing the entire MSME ecosystem. Now, what exactly does SIDO do? So first of all, it acts like the voice of the MSME, representing their needs and ensuring policies are designed in their favor. Second thing is that it focuses on capacity building by organizing training program, workshop, session on modern technology, marketing and export. In short, it helps entrepreneur build a strong skill and become fully ready. So what we have just discussed, let me summarize. I told you, SIDO act like the backbone of the MSME since 1954. They give guidance plus boost competitiveness. They represent MSME in the policy matter. They build skill through training and workshop, and they support long-term sustainability and entrepreneurship. So now let's talk about the financial support. So friend, that if you talk about the financial support and credit assistance, so first comes SIDO. We are talking about the roles played by SIDO. So SIDO help a small business get fund through government schemes and banks, whether for starting up, expanding or modernizing. It even guides them in preparing project report and loan application so that bank trust their credibility. Next is technology and innovation. So SIDO encourages MSME to adopt modern tools and innovative methods. It also connects them with the research body and tech center to get the right technical advice. Then come the market expansion and export promotion. So to showcase MSME products, SIDO organize expos, trade fair, buyer-seller meets. This way, business can reach both Indian and the global market and grab new export opportunity. Then we have cluster development and infrastructure. So instead of working alone, MSME are encouraged to form cluster in different regions. This helps them share facilities, cut cost, and become more competitive together. So to summarize, financial help through schemes, bank and loan guidance, promote modern technology and innovation, expand reach via expos and export support, and build international cluster with shared facility. Now friends, let's look at empowering MSME, the role of SIDO. So SIDO always have worked to empower MSME by focusing on inclusive and balanced growth. So first is called inclusive growth. So by supporting a small industry, especially in the rural and underdeveloped area, SIDO help create job and opportunity. It also builds the capacity of entrepreneur through skill training and financial support. Then to the context of women entrepreneurship, to promote gender equality, SIDO provide special training, funding, mentoring for women-led business, helping them actively participate in economic growth. Third is the rural and cottage industry support. So SIDO encourages traditional industry to modernize, diversify their product and connect with the bigger market. At the same time, SIDO protect local craft and skill, making rural industry more competitive. So to summarize, SIDO promote job and entrepreneurship in rural area. SIDO have a special focus on women-led enterprise. SIDO support traditional and cottage industry with modern upgrades. So friends, SIDO has been a key driver in pushing MSME forward through innovation, finance and market access. First of all comes innovation and technology. MSME are encouraged to adopt modern tools and practices. This not only improve productivity but also make them more competitive. So that is called innovation and technology. Second is the access to the finance. A small enterprise often struggle with capital. So SIDO help them secure credit and financial support, ensuring that they can grow without facing funding roadblock. Third is the market access and export. By organizing trade fair initiative, SIDO connect MSME to both domestic and the global customer. So this open new export opportunity and growth avenue. Now let's look at the impact of SIDO on MSME development. So it creates employment, especially in the rural and semi-urban region, reducing poverty and driving inclusive growth. Second point, it boosts the competitiveness by improving productivity, skill and market linkage. Third is it promote entrepreneurship by, and finally it contribute to export growth, giving MSME global platform and enhancing India's export earning. So these are the basically advantages of CEDO. Now friends, let's look at the next point, that we have lasting impact and future of the CEDO. CEDO work has left a lasting impact on India's MSME sector because its present contribution are quite significant by creating more job across different regions. It has fueled employment growth. At the same time, it has improved the competitiveness of the MSME, right, making them stronger and more resilient. Most importantly, CEDO has promoted inclusive development, ensuring that progress reach every section of the society. Looking at the future, the focus will remain on innovation, supportive policies, and expanding market opportunity. So, by reinforcing these efforts, CEDO will further empower MSME and drive India's economic growth at a faster pace. So, let me summarize the key points. I told you, CEDO created job across region. CEDO boosted competitiveness of MSME. It ensured inclusive and balanced growth. A future focus is innovation, policies, and wider market, and will continue to accelerate India's economic progress. Now friends, let's talk about MSME DI, that is MSME Development Institute. MSME Development Institute, also known as MSME DIs, they were earlier called Small Industry Service Institute or SISI. So they were previously known as SISI. These institutes were set up across different states with one main purpose. Purpose was to guide and train entrepreneur. Right? What was the purpose? To guide and to train entrepreneur, whether they are just starting out or already running their business. So to guide them or to train them, to whom? To entrepreneur. Their core rule, SISI, which is called Small Industry Service Industry, a Small Industry Service Institute. So their core goal is to provide technical, managerial, administrative support so that MSME can strengthen their operation and grow sustainably. So in terms of network, MSME DIs are spread widely with 30 institutes across India and 28 branch offices located in key industrial hub and the state capital. So this ensures entrepreneurs everywhere have access to proper guidance and support. So what I told you just now, that MSME DI were earlier called SISI. The aim is consultancy and training for entrepreneur. Function is technical, managerial and administrative guidance. And network, I told you 30 institutes are there plus 28 branch across India. Now friends, let's talk about the key activities of MSME. So MSME Development Institute, or we call it MDI, right, they plays a very active role in supporting the small business. First is the entrepreneurial support. They provide consultancy for both new and existing enterprise. So for new enterprise and for existing enterprise, they provide entrepreneurial support and also run training and motivational program to encourage entrepreneurship. Second is the industrial and market analysis. These institutes, so-called, MSME Development Institute. So these institutes prepare a state and district industrial profile and conduct market studies, helping business understand growth opportunity. Third is the project and business development. So what they do, they design project profile, they guide entrepreneur on export, and they also support allied and ancillary industry. So that is called project and business development. Designing project profile, guiding entrepreneur, and also supporting allied and ancillary industry. Fourth is the technology and quality improvement. MSME DI promote energy saving, pollution control, quality enhancement, while also helping business upgrade their technology. So technology and quality improvement is one of the four major functions of the MSME DI. Fifth is skill development and training. So they conduct both managerial and technical training and also operate 42 common facility workshop and lab for practical support. And finally, government and institutional linkage. So they coordinate with the district industrial center, or we call it DICs, and a state body while implementing central government action plan and compiling the industry specific directories. Now friends, let's talk about NSIC. What is the full form? National Small Industry Corporation. It was set up in the year 1955. It is an ISO certified organization. It works under the Ministry of MSME. Being a Government of India enterprise, it also has an international presence with offices in Dubai, Johannesburg to support Indian business in Gulf and African market. The mission of NSIC is very simple. What is the mission? To strengthen the MSME by giving them support in marketing, finance, technology and other services. Its vision is to become the leading institution driving MSME growth in India. If we come to its core function, so NSIC provide integrated support to small businesses, help them access market and finance, and offer technology upgrade and advisory services. It also plays a vital role in taking Indian MSME to the global stage. So let me summarize the key point regarding NSIC. I told you it was founded in the year 1955, ISO 9001:2015 certified, Government of India enterprise under Ministry of MSME, oversees office in Dubai and Johannesburg. Mission is to support MSME in marketing, finance and technology. Vision is that premier institution for MSME growth. Function is market access, finance, technology, advisory and global tech. Now friends, let's talk some more points about NSIC. So what I told you, National Small Institute Industrial Corporation or NSIC, it actively support MSME through multiple initiatives. The first initiative is called Scheme Implementation and Facilitation. NSIC act as the partner for the Ministry of MSME, rolling out different government scheme designed for small businesses. Right. So partner for the Ministry of MSME. Second is the technical support and skill development. Through its technical service center, training and incubation center, and livelihood business incubators across India, NSIC provide hands-on technical guidance and training. Third is the entrepreneurship and employment generation. NSIC train unemployed youth in entrepreneurship, help them set up a small venture in manufacturing and services, and create employment by building a skilled workforce. So let me summarize the key point. I told you about NSIC, what they do. They implement government scheme for MSME. They provide technical services via NTSC, that is called National NSIC Technical Service Center, or TICs and UBI. TICs is Training and Incubation Sector, and LBI is the Livelihood Business Incubators. Third is NSIC also train youth in entrepreneurship and support new venture, and it generate employment by developing the skilled professional. Now let's look at some more key functions of NSIC. Let's have a look at it. So the National Small Industry Corporation, remember the full form, National Small Industry Corporation, they plays a vital role in supporting MSME with finance, market, technology and skill. The first is the financial and equipment support. So NSIC make it easier for a small business to get machinery through hire purchase and leasing on simple term. You know about hire purchase and leasing? So by hire purchase and leasing on simple term, right? NSIC make it easier for a small business to get machinery. Second is the market and raw material assistance. So because NSIC, it promote export, right? It participate in the government procurement program. Why? To increase MSME sale and ensure a steady supply of raw material through its depot. Third is the technology and industrial development. So NSIC help industry modernize, upgrade technology, even provide prototype for commercial production. Then we have skill development and infrastructure. Friends, the fourth point is the skill development and infrastructure. It run training program to build workforce skill, encourage entrepreneurship, support enterprise creation in developing nation, and even develop industrial estate to strengthen the MSME infrastructure. So let's summarize the key points. So I told you, easy finance and machinery leasing for MSME, export promotion, government procurement and raw material supply, technology transfer, modernization and upgradation support, training, entrepreneurship promotion and industrial estate development. Now friends, let's talk about the NIES BUD. This is the National Institute for Entrepreneurship and Small Business Development, or NIES BUD. It is an apex body under the Ministry of Skill Development and Entrepreneurship. What is the main role of this institute? The main role is to strengthen the entrepreneurship through training, consultancy and research. 3 words I am telling you: training, consultancy and research. That is the role of the NIES BUD. It also acts like a central agency for coordinating all the major entrepreneurship development program in the country. So central coordinating body for all the entrepreneurship development program. So what are the objectives of it? Its objectives are quite broad. First, it work on promoting entrepreneurship by encouraging people from all sections of the society to take up the business opportunity. Second, it provide institutional support by helping different agencies plan and run entrepreneurship program. Third, it ensures standardized training, which means creating a structured method for entrepreneur selection, training, ongoing support. Fourth, it acts like a knowledge and research hub, maintaining studies, documents, and insight that guide entrepreneurship development. And finally, NIES BUD serve as a platform for policy dialogue, where experience are shared, policies are refined for better impact. So let's summarize the key point. I told you about NIES BUD. Remember the full form: National Institute for Entrepreneurship and Small Business Development. So it is an apex institute under the Ministry of Skill Development and Entrepreneurship, MSDE. It provides training, consultancy, research for entrepreneur. It promotes entrepreneurship across society. It supports agencies in running program. It standardizes training and entrepreneur development. It functions as a research hub and policy platform. Now have a look at the core function of NIS BUD. Friends, before proceeding forward, let me tell you, if you want such kind of PDF for fast revision, for quick revision, and if you need unit-wise theory, unit-wise MCQs and previous year question, then you can enroll in our MSME course. The link is provided in the description section of the video, or you can WhatsApp me on the number 8292857381. I am again repeating 8292857381. Right, now let's continue our discussion on the core function. So what I told you, that NIS BUD plays a very important role in building entrepreneur in India. It works on multiple fronts to make sure that people not only dream of business but also get the right guidance to succeed. First, it creates new and modern training methods or training models so that learning entrepreneurship become practical and effective. Second thing, it uses a scientific way to select potential entrepreneur, ensuring the right people get the right push. Third thing, it prepares a standardized module or ready-made syllabi which can be used by different types of learner. Fourth, it develops training manual, guide and tool that make the learning process much easier. Fifth point, it gives support to institutions and agencies that are involved in the entrepreneurship training. And next point is it organizes a specialized program for trainer, promoter, budding entrepreneur. And finally, it works to create entrepreneurial culture across the country, encouraging more people to take the business route. In short, NIS BUD train, guide, support, inspire entrepreneur through modern method, a standard tool, a special program, and by building a strong entrepreneurship ecosystem in India. Now friends, let's talk about MSME Testing Center. What it is all about, let's have a look. Basically, if we talk about the MSME Testing Center, in short we call it MSME TC. So earlier these were called regional testing center. Their main job is to maintain quality standards. They provide product testing, they help in improving quality, they give training in quality control, and they even guide industries in setting up proper quality system. On the top of that, they have testing station for product specific check. So earlier they were called RTC or Regional Training Center. Their job was to maintain quality standard, providing product testing, improving quality, give training in quality control, guide industry in setting up proper quality system. Next, there are tool room and tool design institute. In addition to the regional testing center, there are tool room and tool design institute. These are like technical backbone for MSME. They help with the advanced tool, mold, jigs, fixture, and also provide a skill training for tools and die maker. Basically, this tool room and tool design institute ensure that MSME can upgrade technically and produce with precision. Lastly, the MSME Technology Development Center for Footwear, which we call MSME TDC. They started back in the year 1957 with the support of the Ford Foundation, right? So it started with the support of the CFTI. They were called CFTI, Central Footwear Training Institute, right? So it focused only on the footwear industry. The center runs specialized courses in footwear technology. It promotes modern design to boost export and create a skilled workforce to meet industry need. So let's quickly recap the point which I have just told you. Three things I told you: MSME Testing Center, which focus on quality and product testing; Tool Room and TDI, they provide advanced tooling and skill training; Footwear TDC, they are dedicated to footwear design, training and export. Now friends, let's look at the MSME Technology Development Center, PPDC Agra. Very important, right? Let's discuss it in detail. So the center was originally set up, this is also called PPDC Agra, right? MSME Technology Development Center, TDC. So the center was originally set up under a Small Industrial Development Organization, or SIDO. SIDO, a Small Industry Development Organization, which was the government of India. And later on 21st July 1986, it became an autonomous body, right? Which means it started working independently. After the MSME Act came into force, it was officially renamed as MSME Technology Development Center, PPDC Agra. How it is managed? It works under the guidance of a governance council. At the top, the chairman is the additional secretary and the development commissioner of the Ministry of MSME, and the principal director act like the chief executive of the center. So in short, we can say it started under SIDO, became independent in 1986, renamed after MSME Act, governed by a council, led by chairman from MSME Ministry and principal director. Again repeating, started under CEDO, became independent in 1986. We are talking in the context of PPDC Agra. Renamed after MSME Act, governed by a council, led by chairman. Chairman is from MSME Ministry and principal director. So friends, have you heard about PPDC Agra? It is one of the key institutes set up by the Government of India under the Ministry of MSME. The main aim is to upgrade technology and to upgrade the skill, especially for small industries like casting and forging. So what does it do? It helps industries become more professional through skill development. It supports economic growth by training people and building expertise. It provides common facility like foundry, pattern shop, heat treatment, machine shop, fabrication, event testing labs. So what services are provided? So training program for entrepreneur and job seeker, consultancy services to improve technology, management and quality. What courses are covered? So GST practitioner, entrepreneurship program like start your business and grow your business, digital marketing, Six Sigma certification, yellow, green, black belt, master belt, black belt, project management, data analytics, plus many more skill based program. So in short, we can say PPDC Agra is one stop center for industries and individual. It provides technology, training and consultancy, helping both businesses and a professional grow in today's competitive world. Now friends, let's switch our focus to the DICs. So what is DICs? Let me explain. It was launched on the 1st May 1978 by the central government. Its objective is to promote small businesses and industrial growth at the district level. That's why it is called District Industrial Center. Right. Framework is a single window system to coordinate and resolve the local industry issue. So if you look at the role of the MSME, it helps set up micro, small and medium enterprise. What kinds of services are provided? Guidance, resources, training and support for entrepreneur. These kinds of services are provided. So what is the rationale behind DIC? It tackles economic stagnation through industrial led growth. Right. It tackles the economic stagnation. Second thing is to drive shift from agriculture based to industry based economy. Right. So there's a transition. Right. DIC is set up so as to shift the drive from agriculture based to industry based economy. And you know it very well that industrial growth it means national progress and global competitiveness. And the main rationale is government funded initiative for district level industrialization. And some schemes are like district industrial center loan scheme, prime minister employment guarantee scheme. So these schemes are also implemented. These are called supportive schemes, right? Now the version is I hope it is clear regarding this point. Now let's look at some more role of the DICs. So friends, what are DIC? They were launched way back in the year 1978 by the central government with one big goal, that is to promote small businesses and industry in every district. So what DIC do? They act like a one-stop shop for entrepreneur. They guide new startup and they also support existing small businesses. They help with the approval, permit, finance, training so that an entrepreneur does not have to run away from one office to another. They focus on lot of rural industry because boosting village level business means boosting the local economy. And of course, they also help generate employment opportunity. If you look at the key function of DICs, so DICs connect entrepreneur with government scheme like DIC loans and scheme and the Prime Minister Employment Guarantee Program, PMEGP. They prepare report to check if a business idea is actually feasible and profitable or not. They help in getting bank loan and other financial support. They also prepare industrial profile of each district, covering things like raw material, infrastructure, opportunity for growth. So to quickly summarize, DIC means single window system for small businesses. They provide guidance, they provide finance, they provide a scheme for entrepreneur. Their aim is to promote industries, reduce dependencies on agriculture, and to create the job. That's why district industrial center are considered the growth engine at the grassroots level. Now friends, let's look at NISIET objective. So let's talk about some very important institutions that support MSME in India. So MSME DI we have already talked about, DICs we have discussed. So MSME DI, what I told you earlier, they were called SISI, spread across all states to train and guide entrepreneur, provide technical, managerial, administrative advice. What about DICs? Their purpose is to promote small businesses at the district level, a special focus on rural industries and job creation. There are some schemes like Prime Minister Employment Guarantee Scheme and DIC Loan Scheme. Now let's shift our focus to the NISIET. Full form is National Institute of Small Industry Extension Training. It began in the year 1960 as CAIIB in New Delhi. Later it was shifted to Hyderabad in the year 1962. Founder chairman was the PC Alexander. It was renamed as SIET Industry, SIET Institute, later as NISIET in 1984. It is recognized by UNIDO, right? UNIDO recognized, right, as a center of excellence for enterprise promotion. It works under the Ministry of Small Scale Industry, focusing on enterprise growth and training. So let's summarize the key point. MSME DI, they give training and consultancy across states. DIC, they promote industries at district level. So across states, MSME DI, across district DIC, NISIET, national level training and research hub for enterprise promotion. So in short, all these three institutions, basically they exist to guide, to train and to support entrepreneur so that MSME can grow stronger. Now let's talk about the SIIC and SIDC. So friends, basically these are the state government owned body created in the year 1955 under the Companies Act 1956. Their main role is to develop industry by building infrastructure like industrial estate, park and zones. Some states call them SIDC while others use the same SIIC. Right, so remember SIDC, some of them call them and other remain SIIC. Apart from infrastructure, they also finance industries by providing loan and sometimes even invest directly in project through joint venture or subsidiary. Right, so what I told you about SSIIC, right, there is that their main job is to develop industries by building infrastructure. Some state call them SIDC while others use the name SSIIC. Their work goes just beyond funding. They act like an agent of industrialization for the entire state. So what are their objective of SIDC? See, they promote MSME growth. Second point, they encourage entrepreneurship and skill development. Third point, they build a strong industrial infrastructure. Fourth point, they provide marketing and promotional support to the industry. So in short, SIDC and SIIC are like industrial builder plus financial supporter rolled into one, making sure industry grow at the state level. So what I told you about SIDC, let me just summarize. I told you it was set up in the year 1995 under the Companies Act. It is a state-owned, because S means a state. It is a state-owned corporation for medium and large industry. It build infrastructure like park and estate. It provide loan, investment, marketing support. It work as an engine of the state level industrialization. Now friends, what are the additional roles and functions financial support by SIDC? Let's have a look. That we are talking about two important institutions that help industry grow in India, DICs and SIDCs. So DICs, I told you already, we have discussed in detail about DICs, which support small businesses and local industry in a district level. And SIDC was established by the state government under the Companies Act. In some state, it is also called SIIC, State Industrial Investment Corporation. They focus on medium and largest industrial, right? So if you look at the financial assistance and source of fund, so they give loan. I think I told you that they provide financial support, loan, guarantee, equity in industry. They also help in project identification, survey and entrepreneurial training. What kind of financial assistance provided by SIDC? So they give loan, subscribe to share or debenture and even joint sector project, generally with 26% equity. They develop internal industrial shield, industrial shade, growth center, incentive scheme with the state government. They work with the IDBI, which is the Industrial Development Bank of India, for refinance and long-term loan. And they raise money through state funding, bank, bond and debenture. So let's summarize. DIC, remember district level, focus on a small industry and MSME. SIDC, state level, focus on medium and large industry. DICs provide guidance, scheme and basic support. SIDC provide infrastructure, finance and equity support. Together, they boost industrial growth, they create job and they strengthen our economy. So friends, DIC district level, SIDC state level. DIC provide guidance, scheme, basic support. SIDC provide infrastructure, finance, equity support. Together, they boost industrial growth, they create job and they strengthen our economy. Now, let's look at the promotional program and support by SIDC. So, State Industrial Development Corporation. Some state call them SIIC. Apart from finance, they do more. Like they identify new projects. They check feasibility. They conduct entrepreneurial training to create new business owner. They help MSME with marketing, raw material, even participation in the government tender. Right? SIDC also make life easier for a small industry by giving advance payment against order. Yes, they give advance payment against the order. Right? They discount bill of government departments. So supplier quickly get up to 80% of their payment. By discounting, supplier can easily get 80% of their payment. Now the question is, what is the source of their fund? Where does the money come from? So they raise fund from state government, IDBI, bank, bond, debenture, apart from their own share capital and reserves. In short, they are not just lender, they act like a partner in the state level industrial growth. So let's quickly summarize. SIDC is a state run body for industrial growth. They build infrastructure like park and estate. They provide finance like loan, guarantee, equity. They support MSME with training, marketing, raw material, tender. They help in working capital payment. Their fund come from government, bank, IDBI bonds. So that's all about SIDC in nutshell. A perfect blend of finance plus infrastructure plus support to promote industries in every state. Now let's talk about the SIDC structure and challenge. Let's talk about it. So what we have just discussed, SIDC provide financial help. They help industry, estate, park and cluster. They also take up joint venture with private player to promote big project. They help industries in export marketing, guiding them to take part in international fair. How many SIDC are there? Today, many SIDC across India, we have 28 SIDC run by the state government. Out of these, 11 11 of them work as state financial corporation. So they handle both promotion and financing role, right? So 11 of these 28 work like a state finance corporation. So they handle both financial operation also and promotion aspect also. But there are some challenges also. So what kind of challenges are there? Many SIDC face staff shortage and lack the I think this is the repetition. They face a staff shortage, lack of experienced professional, right? So it reduce their effectiveness. So what I told you, SIDC are a state level body to promote industry. They provide finance, infrastructure and from export support. They run training center to create skilled worker. They encourage women entrepreneurship. Total 28 SIDC are there. 11 also act like a financial corporation. They face staff shortage, default and inefficiency. Right. Now friends, let's look at the organization and management of the SFCs or state finance companies. So basically how they are managed. We are talking about state finance corporation, an important support system for a small industry. Each SFC is run by a board of 10 directors. How many directors are there? Board of 10 directors. They run each SFC. Now the managing director is appointed by the state government sometime after consulting RBI. Right. So what I'm talking about, that managing director, or you call it MD. Who appoint MD? MD is appointed by the state government. Right. After consulting whom? After consulting RBI, MD is appointed by the state government. Out of the 10 directors, 3 are nominated by the state government, 3 are elected by the financial institution like bank, insurance company or cooperative. Right. So what I'm talking about, SFC run by board of 10 directors. How many directors are there? 10 directors they are there. Who appoint the managing director? State government appoint the managing director. Out of the 10 directors, 3 are nominated by the state government, 3 are elected by the financial institution like bank, insurance company and cooperative. Right. Overall, the state government and the semi-government body will hold the majority control. Clear it is? Now, what do they actually do? See, SFC provide loan to buy fixed asset like land, building, plant, machinery. They mainly support a small industry with capital up to 3 crore. They also help industry raise money by underwriting share, by underwriting debenture and securities. You know what is the meaning of underwriting? So this SFC guarantee that if nobody buy your bond, I will buy. That is called underwriting. Plus, they also guarantee loan taken by industries from bank and repayment can go up to 20 years. So in short, SFC act like a financial backbone for a small industry, funding them, supporting them, even helping them raise money from the market. So let's quickly recap the key points. So what I told you, that it is managed by 10-member body, majority controlled by state. It provide loan for land, building and machinery. It support industries with capital up to 3 crore, underwrite securities and guarantees industrial loan. So friends, if you look at the structure of the SFC, so each SFC has a board of director, right? So board of director are there. How many members are there? 10 members are there in each SFC, and the managing director is appointed by the state. Managing director is appointed by the state government, usually after discussing with RBI, and director come from different sides, right? From where director comes? So director come from, some are nominated by the state government. Okay. Some are elected by the bank, insurance firm, cooperative bank, investment trust. So the control mainly lie with the government and the financial institutions. Now if you look at the source of funding, so their capital is fixed by the state government between 50 lakh and 5 crore. Capital is shared by the state government, RBI, bank, insurance company, cooperative, and even private investor. A state government guarantee this share, giving financial security. SFC can also raise more money through bonds and debenture, but within the limits. So if we see the function of SFC, so what they do, they provide loan to industries for land, building, and machinery. First point. So they help. Okay, so we are talking about the function of SFC. So second point, they help a small industry with capital up to 3 crore. They can underwrite share. I think we have discussed this. What are the challenges of SFC? Yes, too much dependence on government rule, which sometimes slow the decision. Political interference and corruption reduce efficiency. They also need to follow the WTO World Bank condition, which can sometimes hurt a small scale industry. So let's quickly summarize the key point. Created under the 1951 Act for financing a state level industry. Board of Directors is a mix of government and financial institutions. Capital is 50 lakh to 5 crore and government guaranteed capital. Function I told you, loan, underwriting, guarantee for a small industry, and challenges I told you, government interference, corruption, external restriction. These are the challenges. Now let's look at the key highlight of the SFC. So I told you, state finance corporation are a very important part of the India's financial system. Their main job is to support a small and medium industry in different states. They not only help industry grows, but also ensure that development is spread evenly across region, so that progress is not limited to just a few big cities. By funding these institutions, by funding this industry, SFC create more investment opportunities, job, wider industrial ownership at the local level. Currently, there are 18 SFC in India. Out of these, 17 are formed under the State Finance Corporation Act 1951. Tamil Nadu is an exception, where the Tamil Nadu Industrial Development Corporation or TIIC work just like an SFC, but is registered under the Companies Act 1949. So 17 are formed under the State Finance Corporation Act 1951. TIIC is just an exception, right? So to quickly summarize, SFC is the backbone of a small and medium industry in a state. They promote regional balance, investment and job. 18 SFC exist, with Tamil Nadu following a separate model. Now let's talk about organization and management of SFC. So how SFC are managed. The management of SFC are handled by the board of director. The board usually has 10 members. Out of this board, the managing director is appointed by the state government, often after consulting the RBI. State government directly nominate 3 directors. Another 3 directors are elected by the financial institutions. So 3 directors by state government, 3 directors by financial institution like insurance company, a scheduled bank, investment trust, cooperative bank, right? And the remaining member are mostly appointed by the state government and related body. So overall, the state government and the quasi-government institution plays the major role in running the SFC. So to quickly summarize, board has 10 director, managing director appointed by the state government with RBI consultation, 3 nominated by state government, 3 elected by financial institution, and a state government hold the majority control. Now let's look at the function of the state finance corporation. So their main job is to provide financial help to a small and medium industry. They give loan for fixed asset. They provide support to a small industrial unit, earlier up to 3 crore, but as per government guideline, they can go up to 30 crore, right? They can underwrite securities, which means they help new company by buying or guaranteeing their share, debenture and other instrument. So they can guarantee the new company their share, debenture, that's if nobody will buy, I will buy. That is called underwriting. Now, finally, they also give loan guarantee. So, if a business take money from a bank, the SFC can stand as a guarantor. The repayment period for such a loan can go up to 20 years, giving industry enough breathing space. So, let's quickly summarize. Loan for land, building, machinery, support to a small industry, underwriting of share and debenture, loan guarantee with up to 20-year repayment. Now friends, let's look at the working structure of SFC. So I told you, I think this is repeated part. Okay, just let me revise. They were created under the State Finance Corporation Act 1951. The capital is fixed by the state government. Capital is divided into share, which is held by the state government, RBI, bank. I think this portion we have already discussed. Yes. Now let's look at the SIIC, Startup Incubation and Innovation Center. So it was at IIT Kanpur, right? It was set up in the year 2000, when startup culture in India was just beginning, right? Think of it like a support system for young entrepreneur, providing mentorship, guidance, resources to grow their ideas. It connects startup with expert, professor, industry mentor who guide them step by step. SIIC, or we call it Startup Incubation and Innovation Center. This was built in collaboration with SIDBI, right, to promote entrepreneurship inside IIT Kanpur. The focus is not just on profit making, but also on solving real problems of India, especially for marginalized community. The focus on solving the problems from idea to final product. SIIC provide the space, environment, resources that help innovator turn dreams into reality. In short, SIIC is one of the India's earliest startup incubator. It offer mentorship, it connect entrepreneur with expert, it provide resources and focus on innovation that create real impact. Now we have SSIDC. What is this SSIDC? So they were set up under the Companies Act 1956 by the state government to support a small, tiny and village industry. Who set up this? Companies Act, under Companies Act 1956 set up by the state government. State government set up this SSIDC, or we call it a small industry development corporation. Unlike regular government department, they enjoy more flexibility to run different activities that help the small business. One key rule is to procure and supply scarce raw material that a small industry often struggle to get. They also provide machinery on easy hire purchase term so that entrepreneurs don't face a big upfront cost. To help in business growth, SSIDC give marketing support, ensuring a small industry can actually reach customer. They haven't developed industrial estate and shade so that entrepreneur can get ready infrastructure operation. And on the top of that, they provide seed capital, managerial help on behalf of the state government to boost new venture. Now let's look at the SIDBI. You know about SIDBI, let's talk about it. So basically, if we talk about the SIDBI, Small Industrial Development Bank of India, so it was established on 2nd April 1990 to help the MSME grow. It operates under the Ministry of Finance, Government of India, headquartered located in Lucknow with a pan-India presence, provide refinance facility to bank and financial institution. It offers term loan, working capital finance to industrial unit. It serves as the principal finance institution for the MSME sector. It is regulated by the RBI and as one of the four Indian all India financial institution alongside Exim Bank, NABARD and NHB. So Exim Bank, NABARD, NHB and this SIDBI. These are the four, all India financial institution. They plays a vital role in credit extension and refinancing within the financial market. Right. So what are the main goal of it? Let's have a look. So its main goal is to finance, support, promote a small and medium enterprise across India. SIDBI also work with other institutions to make sure that MSME get the right help and right guidance. So what SIDBI aimed for? So I told you that they make it easier for a small business to get loan, to get credit, to bridge gap in finance and support to help the business grow. SIDBI want to be the go-to institution for MSME financial and development need. And it focus on building a strong, competitive, globally recognized MSME sector. In short, SIDBI is a friend and guide for small businesses, provide finance, support and growth opportunities. Now let's look at the SIDBI jurisdiction and the core function. I think we have discussed it. I told you it operates under the Ministry of Finance, right, and its headquarters in Lucknow. We have discussed it already. And it is the main financial institution for MSME sector. It provides refinance facility to bank and financial institution. It offers term loan and working capital finance directly into industrial unit. It is regulated by RBI. SIDBI is one of the four AIFI. What are the other three? Exim Bank, NABARD and NHB. It plays a key role in extending credit and refinancing in the finance market. And it emphasizes long-term financing to help industry expand and grow. What is the SIDBI role in MSME and microfinance development? So SIDBI support microfinance institution, or we call it MFI, through its SIDBI Foundation for Microcredit program. So there is a program called SIDBI Foundation for Microcredit, through which it supports the microfinance institution, helping undeserved communities across small loans, access the small loans. It focuses on rural development by encouraging entrepreneurship and supporting the small businesses in their villages. It run as per the intellectual finance program. It run the institutional finance program which ensure a smooth flow of fund to the micro and small industry. So you can see clearly written here. Directly extend loan to MSME. Then it provides term loan refinancing to banks, small finance bank and NBFC, strengthening the lending network, directly giving loan to MSME. In addition to the refinancing support, established in the year 1990 by an Act of Parliament, SIDBI is the main institution promoting financing and developing MSME in India. Right. Now let's look at the MSME loan scheme by the commercial bank. So let's understand MSME loan scheme in simple term. Why MSME matter? Because MSME are the backbone of our economy, creating job and driving growth. But they often need financial help to start and expand. So basically, banking role is that commercial bank and financial institution offer different types of loan tailored to the unique need of the MSME. Then post-COVID recovery after the pandemic, special credit program were launched to help the MSME revive. Right. Now let's talk about the Pradhan Mantri Mudra Yojana (PMMY). So it was started on 8th April 2015. It gives loan up to 10 lakh to micro and small business that are non-corporate and non-farm. So Mudra rule is that Mudra full form is Micro Unit Development and Refinance Agency. Micro Unit Development and Refinance Agency. It provides refinance support to bank, MFI and NBFC, right? So that they can lend to microwave. Now friends, if you were to apply, so loans are available via commercial bank, a small finance bank, MFI, NBFC and online through Udyami Mitra portal. So if you look at the lead category or loan category, Sisu up to 50,000 for a startup or early stage business. Kishore from 50,001 to so 15,000 as you can see, Sisu up to 50,000, Kishore from 50,000 to 5 lakh, Tarun from 5 lakh to 10 lakh. So Sisu for a startup, Kishore to expand your business, and Tarun for well-established enterprise. No collateral is required. Loan are collateral free with no processing fee. And inclusive coverage also support allied activity like pisciculture, beekeeping, poultry, food processing, and entrepreneurship support. Entrepreneurship focus. It encourages first-time entrepreneur and sustainable livelihood through government mission and initiative. In short, PMMY, I can say that they are designed to empower small businesses with easy collateral-free financing. Now let's talk about the three-stage loan category under PMMY. I think we have discussed it. Sisu up to 50,000 for a startup and early stage business. Kishore from 50,000 to 5 lakh for growing businesses, and Tarun from 5 lakh to 10 lakh for well-established micro unit. So PMMY offer a step-by-step financial pathway. PMEGP. Let's talk about the PMEGP, which is Prime Minister Employment Generation Program. It is a merger of PMRY and REGP, creating self-employment opportunity for youth and artisan. It focuses on micro enterprise in the non-farm sector, implemented nationwide by KVIC. What is the objective of it? To generate sustainable employment in the rural and urban area, to promote self-employment for traditional artisan and unemployed youth locally. Right. So we are talking about PMEGP, generate sustainable employment, self-employment, credit-linked subsidy, and the financial help. So these are the objective of the PMEGP: credit-linked subsidy and financial help to the new venture, especially in the rural area. In short, PMMY and PMEGP together empower entrepreneur and artisan, making it easier to start. Now, friends, how PMEGP work at the state level? Let's look. It is implemented through KVIC Directorate, DICs, which is called District Industry Center, and KVIB. Bank disburse fund directly to the beneficiary. Government subsidies are credited straight into beneficiary bank account via designated bank. Who can apply for this PMEGP? So I told you, age requirement is minimum 18 year. Education requirement is at least age standard. For manufacturing project costing over 10 lakh, and for business service project costing over 5 lakh. 8th class study is essential minimum. And then if you look at the eligible participants, I told you. So age requirement I have told you. Then education requirement I told you, 8th class pass. Eligible applicant includes individual and self-help group, society registered under Society Registration Act 1860, and production-based cooperative society and charitable trust. Who cannot apply? So existing units supported under PMRY, REGP or any other government scheme. Units that have already received government subsidies under any scheme, they are not eligible to apply for PMEGP. What kind of financial assistance is given under PMEGP? So project cost, manufacturing sector up to 25 lakh and business sector up to 10 lakh. I think there is a revision of 50 lakh. Let's have a look. Now if you look at the subsidy rate, so general category, urban rate is 15% subsidy, rural area is 25% subsidy, and special category it is 25% and 35% subsidy. So 15, 25 under general category, and special category like SC, ST, women. So in that case, 25 and 20. Now let's look at the CGT MSE, which is called Credit Guarantee Trust Fund for Micro and Small Enterprise. So it is a joint initiative by the Ministry of MSME and the CAIIB. Its purpose is to promote collateral-free loan for micro and small enterprise. Fund corpus is contributed by the Government of India and CAIIB, and benefit is that MSME can access loan without needing full third-party support. Right. So that is about CGT MSE. So what I told you, contributed by the Government of India and CAIIB. Benefit is that MSME can access loan without needing third-party guarantee. That is one benefit of CGT MSE. So CGT MSE make lending easier and safer for both entrepreneur and the banks. Now let's look at this CGT MSE guarantee is super important. Micro 5 lakh 85%, 5 to 50 lakh 75%, MSE Northeast region up to 50 lakh 80%, 50 to 500 lakh 75%, right? Then women SC, ST, PWD and Agniveer led MSE any loan amount 85% coverage. MSE in aspirational district, so any loan amount 75% coverage. So extra 5% coverage for MSME is identified credit deficient district, is called CDD, ICCD, which means identified credit deficient district, right? From December 15, 2023, coverage limit increase 75% to 80%, 87% to 80 to 85%, and 85 to 90%, effective December 2023. What is the eligibility for CGT MSE scheme? So apply to both new and existing enterprise. Application submitted through bank, financial institution or RRB. Right. So CGT MSE gives MSME high guarantee coverage, especially for women, SC, ST, PWD, entrepreneur and MSE in the backward region. Now let's look at the assistance and guarantee cover. So CGT MSE guarantee assistance. So guarantee cover ranges from 50% to 85% of the loan amount. Micro enterprise with loan up to 5 lakh get 85% coverage. In case of default, lender can claim up to 75% of the defaulted amount for loan up to 200 lakh. How much lender can default? So lender can claim up to 75% of the defaulted amount. The purpose is to reduce the lender risk and make credit easier for MSME. Now let's look at the CLCSS, which is called Credit Linked Capital Subsidy Scheme. It helps MSME upgrade technology by providing a 15% capital subsidy. So main point is upgrade technology, technology upgradation. 15% capital subsidy is provided. This question was asked. Maximum subsidy 15 lakh, 15 lakh for loan up to 1 crore. So if loan up to 1 crore, maximum subsidy 15 lakh, because the MSME want to upgrade technology, and the machines. Then maximum subsidy 15 lakh for loan up to 1 crore. Who are eligible? So only for adoption of the modern or near state of the art technology. Replacement of old machinery or the use of second hand equipment is not eligible. So only when you buy new machinery, replacement of the old machinery is not eligible under this scheme, right? How to apply? Through 12 designated branch and agency including CIDB, NABARD, SBI, PNB, right? So through these 12 designated branch and bank agency you can apply. Now there is something called CLCSS, right, which is called Credit Linked Capital Subsidy Scheme. So who can apply? Open to all MSME that meets scheme criteria. Purpose is to help MSME modernize and enhance productivity. Then we talk about the eligibility rule. So not for unit updated with same technology, right? Second hand machinery is not allowed. Then we have the equity infusion through fund of fund. So which means it addresses equity shortage for MSME, and it is essentially at the growth stop. So purpose I told you about CLCSS, help MSME modernize and enhance productivity. What about equity infusion for MSME through fund of fund? Yes, fund of fund. So objective is to address equity shortage for MSME, especially at the growth stage. Purpose is to support expansion, prepare MSME for a stock market listing. What are the key features? It provides equity funding to visible high growth MSME, channels fund to undeserved enterprise, and government participation improve access to crucial growth capital. Now what are the eligibility and application? So first of all, equity infusion versus via fund of fund. Who can apply? It is open to all MSME, right? How to apply? Through investor portal, investor fund you can apply. And then purpose is very simple, to boost financial security. Now friends, let's look at the CGSSD, which is called Credit Guarantee Scheme for Subordinate Debt. It supports stressed or NPA MSME by providing subordinate debt. Purpose is to enable promoter equity infusion, improve liquidity, strengthen DER, debt equity ratio. Key features include, for MSME classified as NPA account as of April 30, 2020, its promoters can borrow up to 15% of their stake or 75 lakh, whichever is lower. Right? If 75%, 50% of the stake is lower, take that. And for 75 lakh, whichever is lower, it helps revive the operation and sustain business. Now we have CGSSD. I told you. So what are the key features of CGSSD? For MSME classified as NPA or stressed, promoter can borrow up to 15% of their stake or 75 lakh, whichever is lower. It helps revive operation and sustain the business. Now friends, some more point about CGSSD. Let's talk about. So what I told you, that CGSSD purpose is to help the distressed MSME regain financial health and stability. Guarantee coverage is 90% of the debt is covered. Promoter contribute the remaining 10%. Fine. I told you 90% of the debt is covered by the and then 10% promoter contribute. Repayment term is maximum 10 year, which is with a principal moratorium up to 7 year. Impact is that it provide critical support to revive operation and strengthen the finance. Then we have SMILE, which is called SIDBI Make in India Loan for Enterprise. So it support the Make in India mission by providing financial and MSME. The type of assistance can be offer soft loan and term loan with flexible representing term. Then passenger help purpose is to help MSME meet debt equity requirement for new uses. So eligibility, I told you, for SMILE, new MSMEs in the manufacturing and service sector. Existing MSME looking to expand, they are eligible. Focus on a smaller MSME needing the support. Now if you look at the nature of assistance under SMILE scheme, so you know that it is maximum loan is 10 lakh for equipment, 25 lakh for other business need. Repayment term is up to 10 year with a moratorium of 36 months, which means 12 year, 3 year, right? And basically purpose is to help MSME grow, expand and grab new business decision, right? So then we have the MSME business loan for a startup in 59 minutes. So it is designed to provide fast online dispersal should happen within 7 to 8 working day after approval. And eligibility, existing MSME or startup with IT compliance, right? They are eligible. Now let's look at the future of MSME business loan for a startup in 59 minutes. So for fast and fully online, loan processing is completed within 59 minutes. It offers working capital loan, term loan, mudra loan. It is fully automated and and digitalized. Then if you look at the flexible, flexible eligibility available for both GST registered and non-GST business. Non-GST business or those without ITR or bank statement can self-declare necessary detail. Eligibility is assessed based on income, revenue, repayment ability, right? Existing credit and all other terms, right? The portal is linked with CGT MSE. So we are talking about CGSSD, right? Full form you must remember. Okay, MSME business loan for a startup. So this MSME business loan for a startup portal is linked with CGT MSE for seamless verification of the borrower eligibility. Now, what are the nature of assistance under MSME loan? So what are the nature of assistance? Loan range from 1 lakh to 5 crore with in principal approval. It can be collateralized or collateral free, and interest rate start at 8.5% for what? And rapid approval with flexible terms make it a deal for MSME and startup. What about the loan scheme? So MSME loan scheme by bank: working capital loan for daily business operation, term loan for expansion, a specialized loan product tailored to different business need, right? Then we have eligibility and interest rate vary across bank. Now bank and financial institution offering MSME loan. Most banks like SBI, SDFC, ICICI, Axis Bank provide MSME loan product. Other lender include NBFC, SFB, RRB and microfinance institution. This wide range ensure business can choose loan that fit their working capital need or long-term investment. What are the key government schemes supporting MSME? PMMY, Pradhan Mantri Mudra Yojana, which is a loan for small businesses growth and expansion. PMEGP, Pradhan Mantri Employment Generation Program, creates self-employment opportunity via credit support. CGTMAC, Credit Guarantee Fund Trust for Micro and Small Enterprise, enable collateral free loan by providing credit guarantee. Right. So these things we have talked about. What are the loan option we have talked about? So let's look at the loan option. Yes, one more point I want to tell you, that government scheme provide loan and subsidies to support MSME growth. Program like CLCSS, which is Credit Linked Capital Subsidy Scheme, they help business upgrade technology and modernize operation. Then CGTMSE, which is Credit Guarantee Scheme, they reduce lending risk, encourage bank to finance MSME without collateral. What are the loan option offered by bank? Working capital loan for daily business need, term loan for expansion, asset purchase, modernization, collateral free loan improve accessibility for a smaller business. Term and interest rate depends on the loan size, repayment period and trade profile. Right. So MSME now have access to the financial resource, technology support, and risk-free lending option. So friends, that is all we need to learn from the module C. I hope I have done justice to your preparation. I have made simple every important points related to the module number C. Now I request you to solve MCQs which I have provided in our course. Based on them, you will feel confident solving them. Stay tuned for the next module quick revision session. Thank you.